Hey everyone, welcome to the KE Report, another daily editorial on Tuesday, June 24th. Now chatting with Dave Erfle, founder and editor of the Junior Miner Junky. We'll focus on the precious metals, and boy, oh boy, Dave, a lot of geopolitics for us to continue to discuss after last week's volatile moves, mostly in oil that moved from below $65, which is a key level, up to high 70s, and now back below $65 in a matter of a couple days, all on those geopolitical tensions between Iran and Israel and the U.S. even launching some missiles. But now those seem to have slowed. Now we have a ceasefire. It seems like things are going better over there, and oil has dropped. In terms of the precious metals, there were some moves, but they were kind of muted moves, if you ask me, in gold, especially. Gold, though, continuing to consolidate right around some all time highs, just really $150 off some of those all time highs. So, still a strong price there. But, Dave, what are you seeing? What's your takeaway from that volatility last week, all geopolitically driven?
Yeah, super interesting, right? I mean, we went into the weekend with the Trump administration already saying that we control the skies over Iran. In the airport in Tehran has been shut down. You can't go in, you can't go out. We're going to be making a decision on whether we're going to go in there with our bunker busters. So the market had pretty much already priced in that the U.S. was going to do this, and they did it early on a Saturday morning, right? So they could go in, do their business, get out, and then they ended up brokering a peace deal between the two, even though both of them have dishonored that ceasefire. There's still a lot of fighting going on there, but the market is viewing this as Iran being as Iran being a paper tiger now. They can't shut down the Strait of Hormuz, so that's where 1/5 of the oil goes through, and so the oil price, which priced in a Strait of Hormuz shutdown or a shock, that didn't happen. And then the gold price, it was actually up a little bit on Monday, which I was surprised because all this action took place over the weekend, then calmed down. And it was really interesting to see what the gold price did. Everybody was freaking out like, hey, the gold price should be flying. Well, that's the last thing I want to see is the gold price flying on everybody thinking World War III is going to start. Because whenever you see the gold price have a spike up for geopolitical reasons, it's usually an intraday spike and it comes right back down again. So I'm really happy with how the gold price is handling this. We're finding out how much of a war premium is in the gold price here. And I think it would be a lot lower if it wasn't for the dollar. I mean, look at the dollar index. The dollar index also had a little safe haven premium to it. So what's going on in the Middle East, and it's threatening to break down below 98. So if that wasn't taking place, I think the gold price would probably be going closer towards 3,200. That's support level at 3,200 here. And the silver price has held up pretty well too, but it's coming down to test that, breakout at 35. So, and then you go even further and you look at the miners, the GDX and GDXJ. What happened there was this morning they filled those monthly gaps, that have been staring us in the face here for the last 3 weeks. We knew they were going to fill. So those filled this morning, but as soon as they filled, that weakness was immediately bought, and there's huge hammers on the GDX and GDXJ today. It's 11:20 Pacific time right now, and that weakness is being bought. So if you're precious metals and gold stock investor here, you should be pretty happy with how this is all playing out in the sector. We needed to have some consolidation of this move because if you take a look at what the GDX and the GDXJ have already done, and we're not even at the end of Q2 yet. I mean, GDX is up over 50% and GDXJ 60%. So this is healthy consolidation in the sector here, as far as I'm concerned.
Yeah, Dave, I think just even from a technical standpoint, if there wasn't any geopolitics, people were looking for a corrective move just based on where the price action was. And we should remember that when silver was jostling higher into the 36 and 37s, that was before the war premium was even in there. And I know people like a convenient narrative that, oh, this was all just war premium coming out or that, the war premium was there last week. But the reality is there's a very complex market. You've got currencies, you've got global trading, you've got people buying in the East, you've got all kinds of things. So sometimes we like to simplify it down to like, oh, it's the Fed or it's this. But the reality is there's a lot of reasons for gold and silver to have corrected here just on a technical basis. So when you look at those levels, what levels do you have in your sights as far as just technically, if we scrub all the noise out and put it to the side, what are you looking at as far as corrective support levels? And then where do you think it could jump back up to, and what's the timelines you're looking at?
Are you asking me about the miners, or are you asking me about the metals prices?
Well, we could do the metals prices, but you had just mentioned the pullback in GDX and GDXJ, so I would like to include those too.
Yeah, sure. I mean, I'm looking at the GDX chart right now, and there's good support there at 51 where that gap was, and the next level of support is around 47, and I wouldn't be surprised to see that tested if gold came down to test 3200. So that might be associated with that level. And if you take a look at GDXJ, it closed that gap at 65 this morning. And like I said, the weakness was immediately bought. And then the next level of support at GDXJ is down at the 59 area. So I wouldn't be surprised if that's tested if we see gold go down to 3200 or even 3120, where it got down earlier during the previous correction. But as far as the silver price is concerned, I wouldn't want to see the 35 level broken on a weekly basis. And I also would like to see the gold silver ratio continuing to trend down, which is what it's doing. It's threatening to go below 90. So getting it back down to 80 would be very positive for not only the silver price, but for the gold stocks.
Dave, looking at this gold chart, it still looks very strong to me. Just looking at a daily chart that pretty much goes back to the start of this year, we are seeing consistently higher lows, even now, and now a tighter, almost pennant formation where, yes, there's clearly this resistance or ceiling at 3,500, but it's consolidating in tighter and tighter ranges here, almost pointing to early July as a decision point of either breakout, potentially to the upside, or maybe that weakness to the downside. Do you think we could see that breakout above 3,500 though? Just looking at the chart and the way it's set up again so far this year and how consistently it's bounced off that 50-day moving average all year?
Yeah, I mean, well, like I said, we're finding out how much of a war premium is in there right now. But you know, we're talking about the economic situation. The Federal Reserve Chairman Jerome Powell's in front of Congress right now, dishing out the same old line, we're not going to be doing anything. And let's face it, they can't do anything. I mean, the Fed's terrified of crashing the bond market if they hike too fast, and equally terrified of sparking a dollar collapse if they cut too soon. And as far as the government spending is concerned, they can't control that. And there's that bill of Trump's in the Senate right now. If that passes, that's going to add even more to the deficits. It's more deficit spending. So basically, gold is still the safe haven of choice, over bonds and over the dollar. So yeah, I mean, if you take a look at the gold chart, like you said, it still looks very bullish. The symmetrical triangle, the bullish symmetrical triangle, is kind of morphed into a bullish flag, and it's just trading sideways and working off its overbought situation by trading sideways. If you keep an eye on the 18-week moving average, that's been strong support ever since gold broke out of that 13-year cup and handle pattern above 2100. And that line of support now is at 3200 and rising. So I think the worst case scenario would be gold coming down to test that line of support at some point. If it tests it soon, that would be a sharp correction down to 3,200. But if it takes a while into July, that line can move up to 3,250, 3,275. So yeah, I mean, it's all very bullish action, especially when you see the gold silver ratio moving in the right direction, which is down.
Well, Dave, another technical factor to layer onto this is that next Monday we're at the end of the month and the quarter. Now, a lot of people were hoping for a little bit higher silver close, a little bit higher gold close to end the quarter, but still it's going to be at a strong level. How are you looking at those bigger picture charts?
Yeah, that's another thing I was going to bring up. I mean, we were looking at the silver price and how it broke out above 35, and I was saying that, hey, we've we've never had a quarterly close in silver above 37.50. And if we were able to get a quarterly close above 37.50, then I wouldn't be surprised to see 50 pretty soon. That looks like it's off the table now, which is probably a good thing also, because we've talked about this, Corey, in the past, where whenever you see a strong spike move in silver, it usually signifies that it's the end of a move. So more consolidation in silver. I'm happy to see it around 35. But yeah, I mean, if you take a look at the quarterly close, that's going to be important. So if we see a quarterly close in gold below 3,200, that might incite some more selling to start the new quarter. But we still got the geopolitical mess in the Middle East still hanging over us here. The Trump administration is obviously after regime change in Iran. So, are they gonna assassinate the Ayatollah there, or a Khomeini there, or what's going to happen? Is China and Russia going to let all this let all this go down? Let their regime change attempt go down? I mean, how's all this gonna shake out? I mean, like I said, the ceasefire is being broken on both sides right now. So it's really going to be interesting to see how this plays out and how it affects the gold price going forward. I mean, there's still plenty of catalysts to take the gold price to all-time highs, once this consolidation is over, which we don't know when it's going to be over. And there's also an impetus for more selling to come in, for more profit taking to come in, as long as it looks like things have calmed down over there in the Middle East. Then the risk premium will come off more, even more in the gold price, I think.
Yeah, as much as we have these geopolitics, we also still have that budget out of the US that everyone is so focused on that just quite frankly doesn't look great for the US. So that's another catalyst. But Dave, in terms of the stock moves, you broke down GDX, GDXJ, those ETFs. One thing that we've been talking about quite a bit recently, especially, was the run in some of the junior stocks, that rotation of money down. And I was saying, look, I also want to see these majors keep tacking on some gains, get some more money into the sector. I'm fine with that separation between the majors and the juniors because I think that prolongs this bull market. And we've seen, I think, some of the juniors really slow down over the last week. They've faded, but the majors, I feel like there's been a bit more money flowing into them, or some of the higher quality stocks. I've noticed them holding up better. What have you been seeing the balance between, let's say, major companies, mid tiers, and the juniors, those price action?
Yeah, I've been impressed by the action in Newmont, Corey, because that is the largest, most liquid, most recognized gold stock. I've said it before, it's the only gold stock traded on the S&P 500. It's the one stock that you get into when you don't know anything about gold or gold stocks, but you take a look at the sector and you feel that, hey, you have to be in it. So seeing Newmont now take the lead and show relative strength here is very positive. I mean, you take a look at Newmont on the weekly here, and it's still up on the week. So if you keep seeing more money flowing into Newmont, that's very positive for the sector.
Well, Dave, when you think about where we're at with pricing, while they're pulling back now and it's kind of a day crescendo here at the end of the month, end of the quarter, the Q2 prices for gold and silver have been record quarterly prices as an average. So when do you think somebody said the other day that all of that Q2 expectations is already priced in? I know the market's forward looking, but do you believe it's all priced in, or could we see some upside surprises in a couple of weeks when we start getting production results, and then in a month when we start getting financial results from Q2?
Yeah, Shad, it might be priced into resource investors, but it's not priced into to generalist investors, right? I mean, these generalist funds, they're still very, very underweight the gold sector. And now we're about to end another quarter, and it's going to be a third consecutive really solid quarter where these miners are showing that they're making gobs of cash. And we've talked about it ad nauseum before. They've already shored up their balance sheets, right? They're paying dividends, they're doing stock buybacks, they're making all this money, and they got to start concentrating on ounces now, on adding ounces. The markets, their shareholders are clamoring for more ounces. But if we take a look at the assets under management in generalists, what they're invested in relation to the mining sector, it's still just tiny. There's just not that much interest in this sector yet. It's getting there, but there's just not. I mean, if you take a look at how much in generalists were invested back during the tip of the last bull market in 2011, I think it was 7 or 8% had gotten into the gold market via ETFs, but the mining sector was still pretty low. I think less than 2%. It's down, the mining as far as the mining sector, I think it's less than 1% still. And as far as the gold stocks, as far as the metal is concerned, the ETFs are concerned, they're still less than 2% invested in relation to what they're invested in the stock market. So there's still a long way to go. And like I said, just looking at the action of Newmont, follow the action of Newmont. That'll tell you how much generalist interest we're getting. And it's starting to get more positive as far as looking at Newmont is concerned.
Yeah, I think you're right, Dave. That Newmont chart does look pretty good and has for most of this year. But hey, so is the gold price. And quite frankly, like we want these companies, these majors to do more with it. You say they're paying dividend, but they could be paying way higher dividends. They could be buying back way more shares, or they could also go on that M&A front. So let's hope we get some news out of these guys as almost a shock to the system when we get their earnings and production results. Because look, their production isn't going to increase drastically. A lot of these companies are even guiding for slightly lower production, but the metals prices are there to generate some nice cash for them. They just need to start deploying this capital and returning it to shareholders or making some acquisitions. I hope we see some of that news coming up in the upcoming earnings reports, but those will also be a month or two, probably a couple months off, actually. Dave, as always, thanks for chatting. Again, Dave Erfle, founder and editor of the Junior Miner Junky. Click the link in the show notes to follow along with what Dave is doing within his own trading account. Dave, have a great rest of your week.
You too, guys. Always a pleasure.